Hello, fellow traders. 'Tis I, the Rumpled One. It is Tuesday, December 12th, the year 2017. Basics. Been getting more questions, but unfortunately, the questions are kind of veering off the simple path. Yesterday, I believe I spoke about focus, but we just have to get back to the basics. There's only a few things you really need in trading. I mean, we had a discussion online. Somebody was talking about you needed to know all of this and all of that, and you needed all this experience, blah, blah, blah. It's like you really don't. So let's just try and keep that in mind. Focus on the basics. I mean, you pick out your trade trigger. That's one, like a three-legged stool. And then you have your money management. Okay, your risk management. That's where you decide how much you're going to risk. The most you'll risk on a trade. That's one leg. Now, then the third leg would be your exit. Okay, and now all three together, that's your plan. So you see, it's not as complicated as some people want you to believe. In fact, there's was it today or did I miss it? There was somebody who was having a seminar, one of those webinars or something that I had signed up for because this person, promised to tell me, the path to riches or something like that. So, hey, I'm open-minded. Who knows what I could learn. So I have to check things out. But, more often than not, I just kind of shake my head and laugh. Especially when they start throwing squigglies up all over the charts. So anyway, let's get back to the basics here. Okay, we're trading the dollar Canadian this week, and as we can see right now, it's crossed over last week's close, so it's crossed into the wick zone. So there was a trade right there. Simple horizontal line trade. Once again, no squigglies are harmed in the making of this video. And you can see here there's still that one gap that hasn't filled, but the rest of them. So if you had traded all these fills, I mean, there's only one that'd still be open. So there's our pips in your pocket. And as you can see here, looking at the daily, dollar Canadian left the lower wick zone, came back up through, crossed above and the low here, went into the wick zone, out of the wick zone, so there's another opportunity there. And then if you missed that one right here, out of this wick zone. So you can see lots of opportunities. And looking at the daily open crossover, you can see these numbers, how far prices traveled right there. And you can see which pairs are ranging and which ones aren't. For those of you who like the fib retraces, this just shows where the fib retraces in for today. So 9 would be 9% off the bottom, and 92 is 92% off the bottom. I do it like a thermometer. The bottom 0, the top is 100. I don't, if people want to flip the fibs around, that's their business. That's not how I do it. I don't have to do it the way the book says I have to. I do it the way that works for me. And if we look at the buy zone here, as you can see, you had an entry trigger right there. Yeah, you took a little heat, and then it paid off. Also, right here is the weekly open. If you were just trading that, once again, you made money to the downside and you made money to the upside. It's not that difficult. It's basics. These are the basics here. And why people have to try and complicate it, I just don't know. Other than the fact that maybe they want you to buy their book, their tape, their system, their method, you know, their indicator, their robot, their EA, whatever they have that they want you to spend your hard-earned dollars on. So once again, simple. In fact, I was contacted by a trader was asking me about the buy zone, all the work I did over on Stock Fetcher. I guess it's in the never lose again thread and the milk the cows. And he was asking me, you know, hasn't been much, you know, said. I go, well, really everything that needs to be said has been said. The method hasn't changed in over a decade. It's so simple. There's, you know, unless the statistics, unless there's a unless there is a pair that only ranges 20 pips, like here. So far, this has been a very small range on the yen. Okay. In fact, if we want, we can put the yen up on the buy zone here. See, we've got the yen. You see right here, image is reversed. So, but you can see even with this small range, there was a chance just to pick up a couple of pips. There was a trigger there, took some heat, picked up a few pips, came back in the zone if you wanted to keep trading it short. I mean, here we go, black. Then it didn't make a new high, came down. So those were opportunities. Here we had a weekly open crossover. Here we had a daily open crossover. Here we had a buy zone trigger. So even on a, you know, once again, from here to here's 20 pips. You can't fit 29 in the 20. It won't fit. If you had a 20-inch box and a 29-inch stick, it ain't gonna fit in the box unless you saw it. Saw it. It's gonna stick out one end or the other end or both ends, and right here it's sticking out both ends. So you see, this is why it works. I mean, I've tried to explain it. I've proven it that, you know, physically this is why it works. I mean, mathematically it's why it works. Geometrically it's why it works. And statistically, you know, we run the statistics and you can see it works. But, you know, some people, they aren't convinced. But you know what? That's okay. Not everybody has to trade the buy zone. And as you can see here with the rat zone, it put in a low. We've got red followed by green. This candle broke the high. There was a trigger. Red, green, broke the high. Red, green here. Broke the high of this green. So right here, last chance to get on the bus. Ship is sailing. And once again, simple. For those who like the pivots, why do I have that on H4? And once again, the yen, S1 to R1. I'm not the yen, dollar Canadian, I'm sorry. And see here, we had the pivot, took it out. There's the future pivot, so sometime either later today or tomorrow, whatever this line says, it should take it out. I've shown you the pivots stats, statistics, high trade, you know, you have the statistics in your favor. So the statistical probability says chances are you'll be able to put some pips in your pocket taking that, fading the pivot. And here we go, looking at the missed pivots again. We had it on the monthly. You can stick it back to the daily. And you can see here, boom, boom, boom. And this one's missed. So maybe sometime in the future. But see, this one was missed. Boom, got taken out. Boom. Guy sound like what's it? John Madden. And here we go. Once again, simple horizontal line cross using the hourly candle, yeah, H1. And you can see here, green crosses the line, enter. Or you wake up here, green crosses the line, enter. Or you wake up here, green crosses the line, enter. Does it work every time? Of course not. That's why you have your risk management. So when it doesn't work, you only lose a certain amount. See, the basics are you manage the risk. In other words, you keep your losses at a certain amount or less. And when it comes to the winners, you really don't have any control over it. The market will determine whether or not you can have a chance for a big win or a small win. Now, the one thing is, some people are impatient. I should know I am one of them. I will admit that. So if we look here, I guess we can stay on that chart. Oh, let's pull up the price action chart. Okay, let's shift over to M5. Okay, now, being impatient. Let's see, where was it? Right here is a good example of being impatient. You've got the red, you've got the green, you take this trade, okay? So let's say you enter right there. Now, where would you have exited? Could have exited right here on this red candle because it didn't make a new high, but it made a higher low. So are you in the trade? Okay, now if you stayed in the trade, you can see here it started making a lower low and a lower high, but did it break the low? Did it get anywhere near your stop? And so maybe you got nervous and you took pips off the table, but right here it made a lower low, higher high, and there it took off. So you see, right here is where you could get tripped up easily. Because perhaps maybe you took this trade, or maybe you took this trade here, and it went up, and then it came down, and then you were patient, and then it maybe went and took your stop out. And you're all upset. Okay, but right here, so you saw it happen once, but if you look here, these inflection points or turning points or whatever you want to call them, you can see here this is higher, so it's indicating something. I mean, we had closes here, we didn't have any closes below this line over here. So what's that telling you? It's like price is moving up the stairs, moving up the ladder. Okay, that's what you want to look for. So sometimes rather than grabbing those quick profits, look at the price action. And if you really want, if you can be patient, you know, maybe you switch over to the hour chart. You want the bigger runs. Okay, you know, price is the same on all charts, but as you can see, the candle patterns are slightly different, and you're getting a different perspective here. So right here, if you broke this high, you took it, red, green candles breaking that high. If you got in here, then right here you see it's coming down. Maybe if you popped out there, but then it's like, did it make a newer low? You know, right here, where did you put your stop? Did you put your stop here or here? Your stop really wasn't threatened, so you just stay in the trade. If you can stay in the trade that long, and it pays off. So, fellow traders, as always, it's not what you trade, it's how you trade it. TheRumpledOne signing off to go drain the banks.